Hey traders, Raghee here. Welcome to Charts and Coffee Non-Farm Payroll Edition. We're just rolling out of a session in the Sector Secrets Mastery where we did some trades on the NFP release. And this is a really straightforward setup where we put the volatility zones right on the charts before the release. And then once the release happens, we just let it unfold by waiting for price to either reach the red or the green zone, the resistance of the volatility zone, or the support of the volatility zone, and park some limit orders. This is a futures only setup that we look at. And if price sinks down into our limit orders to buy, or price rallies up into our limit order to sell in that zone, we go ahead and take the trade. Today, the Nasdaq did something that it typically doesn't do. Let me show you here all real quick. If you're wondering, yeah, Rob, do you futures trade and do you trade non-farm and how do you trade non-farm? So let's go take a look at the Nasdaq, because that was actually, this hasn't happened in a really long time. And that is where by bracketing the orders before NFP release, I park my limit orders to buy at the aggressive, moderate, and conservative zone, and I park my limit orders to sell again at the aggressive, moderate, and conservative zone. And whichever gets hit, right, that's the entry. The other one becomes a second target. And and the Nasdaq basically hit both those levels. So in, out, done, win. That was it. I haven't had a wick, kind of a travel between the zones like this where you're literally instantly entered and instantly exited pretty much on the data. So that was one that, I never mind when that happens. Although once I'm out, there's no managing the leftover. However, ES was a little bit different. ES did not trade down low enough to trigger our buy. Our buy is actually 10 points below the low that was printed on NFP. So untouched on the limit buys, shot up, hit the limit order to sell. And then now we're trickling down towards the targets from having shorted at the upside. And that's really it. It only hit the aggressive levels today, which is not a big deal. I like when we get maybe aggressive moderate or even aggressive moderate conservative. But that is how you use those hourly price movement range zones for a release such as non-farm. But this is not just a non-farm payroll setup. This is actually an hourly price movement range setup. And you can do this throughout the day as a day trader. It doesn't have to be on hot zones. These are just support and resistance at the end of the day. And the takeaway from all of this, and you can see here in the notes, is that this was a dovish, largely dovish, ultimately release, because expectations for a September rate cut continue to climb. We were at 70 and change. Now we're at 71, close to 72% after NFP. Before NFP was 66.5. So if you're wondering, is this a bullish release or a bearish release? I would say sort of the wrong animal. Doves and hawks, right? Now we really don't have any hawks. They talk hawkishly, but we have no hawks at the moment, really. No one's going to be punching the ticket for a rate hike, right, between now and December, probably even between now and March of next year. So it's really who is thinking we don't need to cut and who is thinking we need to cut. Well, the need to cuts are winning. And if you take a look at where we sit after NFP, this was a dovish release. Now, dovish is bullish, right? Rog, so many animals, yes. So what that means is a miss in NFP, which we didn't get. It might be a little perplexing. Rog, how come we printed a stronger than expected NFP and we're up? Haven't you been saying that good data is bad? Yes, but there are three different things, three different headline numbers that we get right at 8:30. One is of course, the jobs number, how many jobs are created in the previous 30 days. The other is the average hourly earnings. And then the last is the unemployment rate. Now, there is one little number that's related to how many jobs were created, and that is the revision of the May number. So we got the June number today, but they go back and look at the May to say, hey, did we count wrong, right? And they did. They counted wrong to the tune of 272,000 jobs were printed in May. But then they came back and said, whoopsie, we only had 218. That's a downward revision. That's bad data. Boom, that's bullish. So the pretty sizable revision, as well as an uptick in the unemployment rate, has for the most part strengthened. And I won't say this is a hugely bullish equities environment right now, but it has strengthened the expectations for ultimately rate cuts in September, November, and December. So we've been bracing for minimum one cut, possibly two, or probably two, possibly three. That possibly three is turning into a probably three very, 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 very slowly. And that's really the macro takeaway of the non-farm payroll. All right. So that's the trade that we put on. That is what we've got going on. So as always, if you have any questions, feel free to type them in. And let's move this aside here. Take a look at our daily time frame. So where does that leave us? Here on the daily time frame, we're marginally above the previous session close at this moment. Shortly after NFP, all four indices were above the previous session close. Now the Nasdaq slipped barely below. Same with the Dow. Same with the S&P. So just going right back to not much, right? We're hovering right near Wednesday's close. So not bullish, not bearish, but certainly dovish in terms of expectations. And dovish is bullish. All right. So what about CL? Are you talking about Colgate or Crude? Let's take a look at both. I'm interested in both, actually. So if you take a look at crude oil continues its march. In fact, today might very well be the first day that we're slowly organizing it into an uptrend since April 18. April 18 is the last time we saw crude in an uptrend. And now we're starting to see signs that the rally that we've seen since June has now, A, broken the downtrend, B, gone neutral, and that neutral went to bullish momentum. That bullish momentum has persisted since the 21st of June. And here we are on the 5th of July, looking at a sign that crude oil might very well be in an uptrend. So it's time, if you were on the fence about putting crude oil on the watch list and maybe a handful of oil stocks, it's time to put that on the watch list. Now, CL can be CL futures if you put a forward slash in front of it. If you don't put a forward slash in front of it, you've got CL as in Colgate-Palmolive. We have a long position in Colgate-Palmolive in the Sector Secrets Mastery, and there are a number of staples that we are looking at in the Sector Secrets Mastery because staples are not a weak corner of stocks right now. They're actually pretty well supported. Look, they're not semiconductors and they're not tech, but they are pretty well supported. Colgate's an uptrend that triggered a mean reversion. And so we have an open position on Colgate. So it's holding just fine. It's been higher. The thing is, if we see more risk appetite in tech, it usually drops that defensive positioning, meaning folks may not look as closely at building positions in utilities or staples, and they'll favor where the alpha is, right? And that would be tech, semiconductors, communications, even consumer discretionary right now. We know what Amazon and Tesla have been up to since the end of the quarter. All right. So that is CL. Thank you for the question one. All right. Next up, question. Yep. Get those questions in. Yeah. Thanks, Alex. And smash that like button. All right. Let's see what else you've got going on. What are bonds up to? What are bonds up to with this non-farm? So if expectations are for the Federal Reserve to cut rates, maybe September, likely November, definitely December, bond yield should continue to go down while the ZB and the TLT go up, right? So we should see the long bond, even the 10-year, continue to move higher. I am bullish bonds, but the setup for now has been a little tricky. The setup on ZN, the 10 years, probably a little bit more clear than the one on the long bond. But nonetheless, when they're both moving higher, that means lower yields. Lower yields reflects bond traders' expectations that over the course of the next 3 to 6 months, we're going to see lower yields because we're going to see rate cuts. So we definitely have that in play right now. Let's go take a look at what's going on the Nasdaq, which is the strongest of the indices, by the way, gang. It is absolutely the strongest. It's just barely below the previous session close, that line in the sand. We have, as of Wednesday, broken above the narrow range that the Nasdaq's been trading in since basically we put the top in on June 20. We broke above that. We're still above that, by the way. And the Nasdaq's trying to reorganize into a better structured uptrend. But this is, look, when you see green candles and only green candles, do yourself a favor. Focus on the long side. Whatever your long side setup is, whether it's the daily price movement ranges like I use, whether it's a Darvis level, which is one of the tools that we make available to folks here at Simpler. It's an automated support and resistance level. Maybe you're using different moving averages, whatever it may be. Buy the dip is definitely the mantra when it comes to the Nasdaq. All right, questions on CMG? Sure. So Chipotle. Red candles mean for me, there's a lot of other things I can do where I've got better structure and better expectation for upside. However, what I would say with something like Chipotle is that we are above the equator. That's the white line. We're in the bullish hemisphere. Do we have an uptrend? We don't, right? We don't. But I think if we step back and look at what NVIDIA did before the split, not everything's going to do that, right? Not everything's going to do that. So, do we have an NVIDIA-esque rally in front of the 50-to-1 split? Not really. We were already rallying. So there wasn't a sudden acceleration in Chipotle going into the split. It really just maintained mostly its strength right into that date. Now is when we look for the pullback. So let's do this. Let me bring up bear with me here. Let me bring up our sanity check. All right. So if Chipotle were to pull back from its highs, you can see right here, the highs sitting at about 69.26, right? High within the range, 69.26. If it were to pull back what we typically expect to be a reasonable amount of a pullback post split, I would look for 5 to 10%. And we're actually below 10%. So this is a significant pullback. And this is just a great reminder that once the stock splits, we start then to get a buy the rumor, sell the news, because not everyone's in it for the split. Not everyone's in it for the 50-to-1. Some folks are just trading Chipotle because it's a good trading stock with the narrative of the split in the backdrop. So it's bought into the split. Sometimes we see profit taking before the split. We definitely see profit taking after the split. So I would not be surprised to see a move down to 65.80, down to 62.34. We're actually going a little bit below the 10% at the moment. And I would anticipate, based on previous support levels, that just above 60 would be a pretty darn reasonable place to look for support. Now, the next thing I can do is ask myself in this post-split environment, where's the volume, right? So I'm going to open up my trading view charts here. And let's pull up CMG. Don't need the 5, don't need the 1 hour. So what I want to look at is either the year, right? What's happened this year in Chipotle. Lost my chart. There we go. What's happened this year in Chipotle? And where is the volume? Well, the point of control is way down here at 58.13. So that's not really in play. So now I'm going to slide it through to the beginning of the previous quarter, because I don't have much data for this quarter, right? So where is the point of control for the previous quarter? It's sitting at about 63.15. Interesting. All right, so I really don't have a lot of, so here's where the price support is really going to be important above 60. If not, we could easily slip down to about 58 and 3/4 to maybe even 58. So keep that in mind. If we can't keep the Darvis support, which is sitting at about 60.60 to 60.26, 60.20, call it. If we can't hold that price-based support, we could easily slip a little bit lower to the volume. Now, the breakout is most likely going to come as we get back above, say, 63.20. So that's what's happening on Chipotle right now. And again, not everything has to pull in NVIDIA. I would anticipate Chipotle to reorganize at least into a bullish environment, but for now it's a little heavier than I would think post earnings, or sorry, post split. But that's where we sit. But would I expect Chipotle to start moving up again? Absolutely, absolutely. Remember that once folks know there's a split coming, the retail investor likes to buy because they want the 50 to 1. What they don't get is that buying 50 to 1 at $70 or $68, $69 makes no sense to do. Don't chase a splitting stock. Trade a splitting stock. Don't chase it in terms of your longer term portfolio, because very likely after the split, you're going to be able to pick the stock up at a discount. So whether you buy it one and get the 50 split, or whether you buy 50 stocks after the split at the same darn price, usually lower, this case 5 to 10% lower, you're always going to be better off trading into a split and then buying if you want to buy and hold post split. Wait for at least a 5%. Sometimes you'll get 7. In this case, we got over 10%. Between 5 and 10 is a really good general measuring stick for the post split pullback. All right. So this is where we want to see, did the dust settle on Chipotle? I'd say generally yes, especially since we've now traded into that Darvis support. This is why I love to automate everything on my charts, because up here, I'm not going to buy at higher highs. I don't hate my money. I know you don't either. So then we ask ourselves, what's a reasonable place for price to settle down into before it catches a bid? And in that 5 to 10% pullback zone, here we have at the lower end of that, just below that, two Darvis levels just above 60. So 60 is going to be a pretty good spot. But again, if we lose 60 support, be aware that we could slip down to about 58 and change. And that's what's going on with Chipotle. Cool. All right. Question on Tesla. Is Tesla making a reversal today? I have no idea. The bell has it wrong. Nobody knows. I have no clue. So it's really great way is nothing about successful trading has to be predictive in nature. I don't have to call tops. I don't have to call bottoms. I don't have to call targets. What we want to remember is Tesla's just got shot out of a cannon, right? Am I going to presume profit taking? Look, so we think about probabilities, right? If someone's been in Tesla this week, they've had a phenomenal week. And going into the weekend, they might decide, you know what? Wouldn't hurt to take some profit. Profit taking is selling. So maybe it gets toppy up here. Maybe, right? That's one scenario. The other scenario is very commonly in retail trading. You've got a big group of traders saying, oh my gosh, I missed Tesla and I don't want to miss the rest of the run. And so, frankly, those knuckleheads, they are knuckleheads, are going to buy at higher highs because that's FOMO, right? The fear of missing out. So that's the battle. So we can put those narratives, right? It's a trade story. What's the story behind maybe some selling? What's the story behind maybe some more buying? And then we wait to see which happens, right? We wait to see what happens. What's the Nasdaq doing? That's going to influence Tesla. What's consumer discretionary doing, or even Amazon? That could influence Tesla because they belong to the same sector and they both belong to the same index. So I'll put the scenarios, those possibilities out there, and then I'll see which one happens. And so nobody knows what's going to happen. Although I know people like to talk that way. In 2 weeks, this is going to happen. And tomorrow that's going to, I have no idea. And the cool thing is you don't have to, right? So I would definitely say, we set up Tesla on Friday, the last trading day of the quarter. And we said, hey, look, it's sinking into the daily price movement range. It was a potential setup. And it's been launching off that zone since then. So I wouldn't buy it up here. I would love a pullback. Pullbacks would be great. I'll focus on the daily price movement range for that. And then, we can look at mean reversions, things like that on the 1 hour if you want a more nimble approach. But that's what we've got there on Tesla. So have the scenarios in your mind. Then remember, nobody tells the future. I don't know why in trading we somehow think that's part of the job. It's not, because guess what? Nobody can. We don't have to. So we put the two scenarios out there and we see which one happens. And we react to what we see. All right, gang. So that's, ultimately what we're going to see. And if you look at where Tesla is, pre-market, you get a pretty good idea of what's happening with Tesla, right? It closed at 246.39. It's going to open up at 250. So, we're already seeing higher highs. But as far as what's going to happen the rest of the day, that's where I'd say keep an eye on a 1 hour chart, maybe keep an eye on a 5-minute chart and see what sets up. All right, gang, I got to wrap it up here. I will see you all Sunday for Top Tier Outlook, Sector Secrets Mastery, folks. Stay tuned. I'll be in the room in just a moment.